Good evening. Today is March 23rd. S&P 500 sold off 45 points in the afternoon after testing the 39.35 level a few times today, and we have closed down 26 points, a little over 0.5%. Russell underperformed dramatically after being down over 3.3%, while Nasdaq was down only 1/3%. And bonds had another up day. Oil, on the other hand, was down almost 7% on demand fears as Europe is still closing down and Germany is instituting a much more stricter version of lockdowns for Easter. GameStop stock had earnings report after hours. Initially, it was up 5%, then it was down 5%, and now it's kind of trading unchanged. And it has been trading in the range just slightly below $200 for the last 6 days. The major news for the day were that Yellen and Powell were speaking today, both of them. And Yellen said that she sees that asset valuations are slightly elevated by historical standards because the economy is coming back on track, that this is not an issue, and that the bank sector is very resilient and financial institutions are managing their risk appropriately. And Powell also echoed her sentiment. Same thing, he said that asset prices are slightly elevated, but banks are flush with cash and look very healthy, so no reason for concern. He also said on inflation, while we see some upwards pressure on the prices, it's neither large nor persistent. So he sticks with the temporary inflation statement, and as he has been for a while. He also said that Fed is strongly committed to keeping public expectations for future inflation under control, as they have been for decades, and they don't believe that this one-time spending surge leads to temporary prices increases that will be permanent. And Fed is also forming new committee to monitor climate risks. Other than that, there were also lots of news on taxes today, as Biden tax plan is preparing to tax capital gains for millionaires and plans to raise it to 39.6%, the same rate as income tax. And Yellen also agrees with that. She said that we recognize that our tax system cannot be tilted towards corporate interests and the wealthy, while those that are sustained predominantly by wages bear an unequal burden. There are also rumors that the bill is going to have the wealth tax, 2% on the most wealthy people from 50 million to 1 billion, it's not clear, and 3% tax for anything over 1 billion. At the same time, New York State is planning to raise their taxes, and 250 business leaders, including JP Morgan's Jamie Dimon, Citigroup, Morgan Stanley, BlackRock, they all wrote a letter to Cuomo and other lawmakers arguing that New York City doesn't increase their taxes significantly. Otherwise, all of those people who left New York City temporarily for COVID might not come back and stay here in Florida, where the weather is always sunny. Victor, what do you have for us today? What do you make of today's sell-off?
It tested the round number of 3,900. Yesterday started out a little below it and ended 30 points above it. Today it went to that same level as where it started yesterday, and then it went above the round number. So the round number is exerting a gravitational impact. We had bonds up so that it recovered its losses in the last 6 days. We had a blue day today. Bonds were up big. It was very blue. Bonds were up big. Stocks were down. In general, that's somewhat bullish. The duo of Powell and Yellen creates disbelief. They're both restating and emphasizing the progressive line. They don't seem to care about the rest of the economy were diversity, climate change. That created the last surge down. It was about unchanged until about 2:30. Then it had a nice drop of 40 points before it came above the round number. Even the Triple E don't like a tax increase. The individual is not a zombie who doesn't react and provides like a stone wall that you can just hit as much as you want. The proposals in New York would put a man at a person whose income is above 4 million of all their special taxes and social security, and their tax rate would be about 66%. If anyone thinks that individuals won't react to working 2/3 of their time for the government, then you have to pay your own expenses from that time, and you have 4 months to take it back. And it's bad for incentives. However, everything's woke. Progressives still blame everything on Trump. I noticed that the betting odds on Democrat to win the primaries keeps increasing in Harris's favor. She's almost 60% to be the next candidate on the Democratic side versus 40% for Biden. She's continuing her hatred of, which I think is very woke and is very good for the market. She refuses to salute the Guard, Marines, which is a tradition that's been followed for 20 years. So there's a lot of woke around, and we're in a quandary because even though Cuomo is very much, if he were a progressive, if he weren't a progressive, he'd be tarred and feathered, ridden out on a rail, but yet all the alternates to him are much more progressive than he is. So you want justice or some sanity? Devil's choice. The only things that I had to say besides the degree of wokeness is that we had a very nice blue day today, generally somewhat bullish. We for stocks, the round number held. If it goes below, will be a buy. We're less than 1% away from the all-time high. Proverb of the day is, the theory of the ending proper is concerned with the conversion of the slightest advantage into a win. So today the ending was from 3 to the close was down 30. From 3:30 to the close, it was up 10. You have to know the rhythm and the beat and the melody. And if you do, you can make beautiful music in the markets. Okay, that's it for me. Should be an exciting day tomorrow. Mr. Round Number will be the key. Thank
Well,
you.
And before we go, I just want to bring to your attention that today is a 1-year anniversary of the pandemic lows in the market, and S&P 500 has now seen its largest 12-month gain since 1936. So it's larger than during 2010 after the great financial crisis. So of course, that's the new scare for the people today, because what happened in 1937 wasn't so good for the market. So now that it's the largest 12-month gain since 1936, zero hedge is getting very bearish again.
Well, the more people that get bearish, the better it is for the market. Before that bearishness, we're 1% below the all-time highs.
Indeed.
All right, but remember this idea of taking the low point. I mean, it's NASDAQ is up about 1% for the year, and the S&P had a normal year for the last year, was up about 7%. Now it's up another 5%. So if you take an unusual, if you take a low price and compare it to a high price, you're going to get unusual spikes. But it doesn't. People always say, "Well, what if I?" You're always talking about 50,000 fold a century, but what if I buy it around like I did in 1999, and then goes down 15%, or in 2007 and goes down 40%. But those are counterbalanced by the many times that it's up more than 10% in a year. And similarly, the bad times from in the first 3 months of last year, they're counterbalanced as usual by, we said a while ago that when the NASDAQ was down and the S&P up for the year, it's 90% to be up for the stocks 60 days later. That was about at these levels. Still stands. Okay, thank you very much.